there's three benefits that I want you guys to pay attention to. The first one is the obvious, right? Higher credit limits and spending power per the SBA. You're going to get 10 to 100 times higher amounts than you would on the consumer side, which is why you'll often hear, how the heck did this person get $500,000 in funding? I'm only getting, let's say, 15. The reason for that is because there's a sequence that they're running that's allowing the business to represent itself versus just the individual. And so that when a bank sees that, why would a bank want to lend an individual $500,000 if the average consumer doesn't need that? But in the business world, $500,000, that's a drop in the bucket compared to what some of these Fortune 500 companies are running for payroll every week. The second reason, it's going to protect your personal finances. What do I mean by that? The worst thing that can happen, and one of the fastest ways to cause a business owner to get audited, is when they start kind of commingling their funds. What that means is you have, let's say, your personal credit cards, but you're using, and I know you guys are there because I've been there before. You have your personal credit cards that you're using to try to scale your business. But now what ends up happening is your credit utilization goes through the roof. Maybe you guys are trying to pick up some extra marketing, whatever it is, that starts to blow up your credit utilization. But now what ends up happening is that there's two things, ladies and gentlemen. The first thing that this does is it creates a potential barrier of entry for getting an audit with the IR and the S, which are the big boys, right? You get a potential audit from them because they see that you're kind of commingling funds, and it's not necessarily that you were intending to, but what ends up happening is like, I have to because I don't have any business credit in order for me to be able to fund my business. And so now they see that commingling, and so they say, okay, let's pull you aside and let's see what's going on. And the second thing that ends up happening, which is what we're really seeing and something that I've been really trying to nail down inside of my program and warning all of my clients about, especially when there's more talks of recession, whether we go into a deeper recession, whether it's just a pop in and pop out recession, whether we go into a depression, whatever it is, climates start to change in the economic system with banks. Translation, Irv, what does that mean? That means that banks are then going to take a look at consumers, which are most likely the ones that are becoming the most over leveraged, and they start slashing credit limits. So now what's happened is you've essentially taken a pay cut, and you've essentially taken a cut in your business, not because you wanted to, but because your limits are now slashed in half because you're riding your utilizations too high. And so how do banks protect themselves? They kind of pull back until things kind of clear up again in the climate. It's important. Number three, tax advantages. This is going to allow you, whether you are a business owner or an investor, and even if you're an aspiring business owner and you're not maybe at the caliber that you want to be, you can also take note of this. You can get bigger tax write-offs, and you can also get tax deductions on the interest on the loans that you use. Remember, the loans that you take are taxed, the interest on the loans that you get are tax deductible, and the loans that you get are also not included as taxable income, but it's used to scale your income. But like anything else, there are some business credit myths that I want to run through really quickly with you. Number one is the first myth that we're going to bust is you need to have an LLC or a corporate established for years. This is the misnomer. This is a lie. You do not need to have it established for years. The second thing is personal and business credit are reported the same. Big lie we're going to be breaking down tonight. They are not reported the same. And then the third myth that we're going to be busting today is the way my business is set up doesn't matter. It 100% matters, and it's most likely what's keeping you from getting the lines of credit that you want to get. Now, with this section right here, I know that Rad has covered some of it, but it's going to lay, I want to lay an additional kind of like layer from the foundation that he's already built for you guys. I saw what he laid out for you guys, and it's just absolutely brilliant. And so I kind of want to piggyback off of that. You want to make sure that you set up your business name properly, right? You want to check with either NameCheck, and that's not a typo. That's exactly how you want to spell it out, namecheck.com, and the department and your state's Department of State website. Why do I want to do this, Irv? Well, the last thing that I want to do before I make t-shirts, before I make coffee mugs, before I make a website, I want to make sure that the name that I have is not going to be copyright infringement, and the name that I have isn't trademarked. You can check that as well. And the name that I have isn't already taken by someone in my city or maybe across the country. So as I start to maybe grow my brand and as I start to grow my company, I don't have to come back later and make a name change that's going to maybe affect the way that my customers are able to find me. So that's the first thing that I want you to pay attention to. pick your business name. The second thing when it comes to setting up our business is we want to set up the business properly. What does this mean? You can do an S corp, you can do an S corp, you can do a C corp, or you can do an LLC, which is considered a disregarded entity. The fourth option that you guys can do is you can do it as a sole prop and then do a DBA. That's fine. Now, a little caveat: if the purpose of you getting business credit is for you to, again, legally divorce yourself from the business, then I would stick to the LLC, the C corp, and the S corp. I get this asked quite a bit. Irv, can I build business credit and can I get business credit cards just with the sole prop? The answer is yes, and that's going to be for some banks. But if you want to get some of those high juicy limits, LLC, C corp, and S corp is the route that you want to take. Now, pro tip: this is going to allow you to float bigger balances on your credit limits. The reason why I say this is because anytime that you get access to a line of credit, either a line of credit, a loan, or a business credit card, right? We're kind of gonna use that interchangeably tonight. You're able to carry a balance, and you're not having a bank come after you and saying, "Hey, how about you start paying down some of these cards because your personal utilization is getting rocked and your personal credit score is now coming down, and so we're about to start slashing your limits." That doesn't happen as much in the business side because they understand the logistics of business is to continually use debt and recycle it in order for them to grow their revenue. The next thing that we want to get, which I'm sure Rad has covered with you guys, is your employer ID, also known as your EIN. Think of this, because this gets confusing for some. Think of this kind of like the social security number for your business. And I want you to think of your LLC kind of like the birth certificate for your business. Notice that the birth certificate and notice that the social security card are two totally different, especially for those of us that have kids, are two totally different documents. Our social security number in the personal credit world is like our employer ID. That's what we put on applications in order for us to apply for lines of credit, in order for us to apply for a home, for an auto loan, for a mortgage, whatever it is. Same thing in the business world. When you go to apply for some of these trade accounts, some of these credit cards, you're using your EIN. Over in the business world, we have what's called our LLC, which is kind of like the birth certificate for our business. That's how we created that person, which again, the disregarded entity, the IRS sees it as its own standalone person, right? And so now that we know that, okay, my birth certificate for my business is how my business is established, disregarded entity. And then over on the other side, which is my EIN, that's seen as my social. So now we blend that together, and now we're starting to form a business that we can then go out and get funding for. But like anything else, you live somewhere, I live somewhere, Rad has a home. Everyone on this call, even if you're watching from your car, you're eventually going to go home somewhere, whether it's an apartment, whether it's a house, whether it's a condo, whether it's a penthouse, whatever it is, needs to happen. The same thing with your business. But an issue that a lot of people make is they end up trying to use a PO box. PO box is a big no-no in the business credit world, and it's going to get you automatically flagged, and it's going to get you flagged, and they're going to put a note on your file that your business is seen as unstable.